Hello, my awesome accounting students. In the first half of the video on Chapter 3, we learned about the 5 rules of debits and credits. In this second half of the video, we will put those rules to use with the first 3 transactions. You will recall that the first transaction was an owner's investment, and the next 2 transactions dealt with purchases of equipment for both cash and on account. All companies start out with the owner investing money into the company. So let's talk about how this would be recorded in T accounts. Since the company's cash is going up, we will increase cash with a debit. The rule for all assets is they are increased with debits and decreased with credits. And the owner's capital is also going up. Because capital falls on the other side of the accounting equation, we increase capital with a credit and would be decreased with a debit. At all times, debits must equal credits. In our next transaction, the company purchased $5,000 of equipment for cash. This transaction involves 2 assets. One, equipment, goes up with a debit. The other one, cash, will go down with a credit. Remember, at all times, debits must equal credits. In our next transaction, the company purchases another piece of equipment, but this time it's on account. Assets, specifically equipment, would go up with the debit, and liability, since it falls on the other side of the accounting equation, has the opposite rule and will go up with the credit. At all times, debits must equal credits. Let's do one more transaction involving a utility payment. In this transaction, the company pays $650 for utilities expense. Utilities expense would be increased with a debit, and since cash, an asset account, is going down, it would be decreased by a credit. Remember that at all times, the debits must equal the credits. You cannot practice this part of the chapter enough. This is a reminder that unless you understand these concepts, it will be impossible to be successful in the remainder of the course. So please take these suggestions to heart. Go through every transaction and understand the logic. Practice by doing the homework, then assess yourself by taking the quiz, and then go back and review using Learn Smart or SmartBook. Repeat until you have mastered the concepts. And one last reminder, these are foundational concepts. You cannot be successful in the class without mastering the basics. Once you have multiple transactions posted to your T accounts, we need to remember how to foot them. So add up both sides of the T accounts and write down the total. In this summarized cash accounts, the debits total $125,000, the credits total $13,650. The next step is to net them together and write the total on the side that has the larger total. So once our T accounts are all totaled up, then what happens next? The last step is to make a trial balance. A trial balance is a listing of all accounts that have balances with the ending total dropped into either the debit side or the credit side. The purpose of this trial balance is to prove that the sum of the debits equal the sum of the credits. It is a good idea to prepare a trial balance prior to creating the financial statements. And like always, on the last line, the debits must equal the credits. The last step in the chapter is a review of the 3 financial statements. The source of the data for the financial statements is the previously prepared trial balance. Unlike the trial balance, there are no debits and credits on financial statements. As you will recall from the previous chapter, the income statement is prepared first and measures whether the company was profitable or not. The statement of owner's equity is prepared second, and it shows whether the owner's worth went up or not. And finally, the balance sheet proves that the fundamental accounting equation is in balance. Last chance, please go back and review all the transactions in this chapter, as well as the preparation of the financial statements. These 2 chapters will be pivotal to your future success in the class. This is Professor Johnson signing out.